Hey everyone, I wanted to talk a little bit more about trading today. Several people, even today, have asked me, can they start trading with X amount of money? One friend thought that they could turn $1 into $1,000,000. It doesn't work that way. Another friend just told me, or asked if they could start off with $200. For most um, trading companies like E-Trade and Scotts-Trade, you need a minimum amount of money to start investing. I believe back when I started, it was 5,000. But I mean, anything less than that is just not worth it, and I'll explain that. So, say you start off with your $200 and you invest in something. These companies, like E-Trade and Scotts-Trade, will charge you per transaction. So if you would like to buy a certain number of shares from a company, they'll charge you a flat fee for that one transaction. Say you buy 100 shares of company X. That transaction will cost you $9.99 at E-Trade or $7 at Scotts-Trade. So, say you start off with your $200, and say you're using Scotts-Trade. So, say you have a $207, and you invest in a company, and you invest all of your money. Say it's a $2 share company, and you buy 100 shares with your $200. So now you have 100 shares in that company, and they took your $7 in order to pay for that. They're also going to charge you when you sell it. Just same thing with E-Trade, and I'm sure Ameritrade works the same way. When you sell, you're going to have to pay another $7. So, what percentage would you need to gain to break even? All right, so you've got your $7 that you already lost, and you know you're going to lose another $7 when you sell. So that's $14 you're already paying on that $200 investment. Now, 14 over 200 is the same thing as 7 over 100. So that's 7%. You're going to need to gain 7% on that investment in order to break even. For someone that's not familiar with the market and the numbers, 7% is a lot. That's not something you see every day, especially if you're fiddling around with low volatility markets or companies. Like a high volatility company could probably fluctuate 5% in a day if you're lucky, most likely downward. So it's just not feasible for you to make any money if you're starting off with so little. Let's take that same example and invest $5,007. So now we've got our $5,000 that we're spending, and we pay our $7, and then we pay another $7 to sell once we're done accruing the amount of money that we want. So what would we need in order to break even? So you spent $14, and you want to know how much, basically, what percent is 14 of 5,000? So you divide that up, and you've got 14 over 5,000. You can reduce each by a 0, and you've got 1.4 over 500. So you divide the numerator and denominator by 5, and you get approximately 0.3 over 100. So you've got 0.3%. In order to break even, you have to make 0.3%. So say you made 1% on this $5,000. Obviously, that would be $50 that you made. And then a portion of that, 0.3% of that, which is the $14, is going to be removed from that during the buying and the selling process of that trade. So basically, that's just explaining why you can't really use small amounts of money. It's just not worth it because of the nature of the way you and I can trade. I mean, we're not down at New York trading with our money. We're going through a brokerage company like E-Trade or Scotts-Trade or Ameritrade in order to make all of our transactions. And that's why part of the reason why you need to wait for your funds to settle. Say you wanted to completely live off of your earnings, and some people do, but they're very good. They're messing with thousands and thousands of dollars. So a small percentage is going to give them a lot of money that they can pull out and use for whatever they need in their life. You can't do that with small amounts because you need to know exactly every single thing about the market and exactly what it's going to do to get to the maximum profit. And even then, if you made 100% on your $200 investment, that's still just making $200. So you have $400 now. It's just, you can't do it. Sorry. When you're using these companies, you need to wait 3 days for the funds to settle. Say I sell all of my stocks from one company. Those funds that I gained from that will go to my account, but they'll be unsettled because they need to go through the bank process, and you need to wait 3 business days for those to actually be for that to actually be your money. So say you've got say you would like to make $1,000 a week. What amount of money would you need to reasonably make that? For this example, let's use 0.8% a day as something that's feasible. So you want to be making $200 a day, and then 0.8% is to 200 as 25,000 is to the 100. So basically, 0.8% of 25,000 is your $200. So if you've got $25,000 and you're making 0.8% every day on that 25,000 consistently, you make a trade here and there, then you're making $200 a day, and you can pocket that and then invest the rest and just continue on. But you can't really do that because you need to wait for your funds to settle. So you basically need 3 times that money with that rate in order for you to trade every day. You can't use that money that you just got from that previous trade right away for another trade. So when you're day trading, if you don't have multiple sections of funds, you're not going to be able to trade as often as you'd like. You can't just buy and sell and then immediately buy and sell something else in the same day. That's one thing that definitely gets in the way of people truly trading what they want to trade. But that's just a little explanation on basically why you can't use very low amounts of money to trade, because it's not doable. You're not going to benefit from it. And then also a little bit about how funds need to be settled in order for you to use them in the market. All right, see you guys tomorrow.